Welcome back to Next Gen Investing. It's now time for FOMO, and today we are talking, of course, Nvidia earnings, which were not enough to hang on to their brief but still notable pre-market rally as we're down about 2, now almost 3%. I just was saying we were coming back, and I think I jinxed it. So now joining us is Caroline Woods, senior markets correspondent for the network. So Caroline, walk us through the good, the bad, the somewhat in between, because I have to say there was nothing concerning about this report, just that decelerating pace of growth seems to be front-running right now the price.
Hey there, Jenny. Yes, I mean, when it comes to walking through the good and the bad, it's mostly good here. And if you take a look at the share price right now, down about 3%, you wouldn't necessarily know it. But this was a very impressive quarter for Nvidia. Earnings and revenue surpassed Wall Street's estimates. Earnings per share of 89 cents on an adjusted basis, easily topped the 84 cents analysts were looking for. Revenue was up 78% year over year to $39.33 billion. The expectation was for more like $38 billion, so easy beat there. Data center revenue surged 93% on an annual basis to $35.6 billion. That also topped estimates. Current quarter, the first quarter guidance, Nvidia said it expects $43 billion in revenue, plus or minus 2%. The expectation was around 41.78. That implies 65% growth from a year earlier. Yes, it is a slowdown from the 260+% annual growth in the same period a year ago, but still impressive nonetheless. In terms of Blackwell, the next generation chip, Nvidia's Blackwell accounted for $11 billion of quarterly revenue. And then in terms of the ramp, the CFO said the company expects a significant ramp of sales in the first quarter. It says this is the fastest growing product ramp in the company's history, unprecedented in its speed and scale. Jensen Huang called that demand amazing. What could be weighing on shares, not necessarily bad, but if you kind of look at the spots that weren't as bright, gross margins. If you take a look at the gross margins, Nvidia reported 73% gross margin in the quarter. That was down 3 points on an annual basis. They blamed newer data center products being more complicated and more expensive for that. In terms of the outlook, they did say that during the Blackwell ramp, gross margins will be in the low 70s, should be in the mid 70s later this year, so a recovery, but that could be seen as a negative. In terms of China and the competition, they did ask Jensen Huang about DeepSeek on the call. He basically said it's ignited this global enthusiasm and it's an excellent product, but he actually made the case that AI is going to require more compute versus less going forward. And then in a CNBC interview, he did point out that it's getting pretty competitive in China, specifically calling out Huawei. So that could be seen as a little bit of a crack as well. And then to that point, there was this news out of the White House about tariffs earlier today. President Trump was tweeting on Truth Social saying that the tariff scheduled to go into effect on March 4th will indeed go into effect. And then there'll be China will likewise be charged an additional 10% tariff on that date. And then the April 2nd reciprocal tariff date will remain in full force and effect. So it seems like after that was posted, shares actually took a turn. So could also be some of that tariff uncertainty weighing on shares. But overall, shares still up 6% in February, still negative year to date now, down about 5% year to date, but about 16.5% away from the highs. But still an impressive one-year chart for Nvidia, just not necessarily seeing it play out today.
You know, Caroline, this report isn't all that different from the reports that we've seen over the last few years. Massive beats, lots of optimism, unprecedented this, unprecedented that, new products, oh, everyone wants it. Yet the stock's down, 2.5%. It's down year to date. To me, the worry is that you don't have this pile-on effect happen anymore. It's almost like this is now expected and baseline and perhaps even priced in. So it's sort of, it's lost its edge, if you will. You don't see all the price target hikes after. How is the street reacting?
We did see some price target hikes after. I mean, it's hard to get a lot more bullishness on the street when about 90% of analysts were already bullish. But I did see Truist raise its price target to 205 from 204. B of A raised to 200 from 190. Morgan Stanley raised to 162 from 152. Called it a transitional quarter and a remarkable growth phase. Did say it's not perfect, mostly due to continued gross margin pressures, but they say that their checks are well on their way to improving. So I think that, in terms of what's priced in, analysts still upping those price targets. The median's 175. I will say I did see one downgrade from Summit Insights following this report to hold from buy. No price target was given, but the analyst there says that the stock should continue to outperform consensus expectations, as we've been seeing. Alex, to your point, we've kind of gotten used to that, but says the risk reward on the stock is no longer favorable due to persistent high whisper numbers and rumor of entry into the PC client MPU market. Also said lower computing power requirement for inference, which is not playing out quite yet, but they think it will undoubtedly have a negative impact to the company's financial performance in the medium to longer term, and also believes that its outperformance and growth could decelerate into the second half of fiscal year 2026 as supply of its GPUs catches up to industry demand. So definitely taking a more cautious approach. But if you take a look, like I said, almost 90% of analysts rate it as a buy. Wedbush's Dan Ives, of course, a big bull, basically came out and said that they continue to believe DeepSeek and other models will further drive demand for Nvidia chips. And they say that they think that a recovery in the tech sector, which has been out of favor so far in 2025, should resume, largely based on Nvidia's results, and thinks that Nvidia will have a $4 trillion market cap in 2025. AllianceBernstein's analyst Stacy Raskin called last night's report relatively quiet, but said the data center opportunity is enormous and still early, with material upside still possible. So I will say that the analyst community much more bullish than we're seeing it play out in terms of price action today. But it's the bar was high, and it doesn't seem like Nvidia necessarily crossed it, at least not right yet.
I'll give you Joe Moore at Morgan Stanley going from 152 to 162. I can't give you Bill Stein going from 204 to 205. That's just trying to make a headline with doing nothing different. The street's price target going into this was like 174.
The wrong.
Yeah, it's like 175. It was like 174 before. But they are optimistic. I'm not discounting that. They're just not piling on like they have been in recent times. Final thoughts, Caroline.
No, and I think, yeah, you're right there. But it's hard to get that much more bullish when so many of these price targets are already significantly higher than where Nvidia is currently trading. So we didn't see price targets get scaled back because of this report. Ultimately, on the whole, it was a good report. Nvidia continues to blow it out of the water. It's just that, we've gotten kind of used to it. Plus, there's the additional layer of tariff threat. And on top of it, AI has just been out of favor so far in 2025. The bulls think that will change, but we've been seeing that broader rotation, and it's just not working in Nvidia's favor right now.
It's definitely not. And I will say, to give the analysts some credit, I would definitely be doing the same thing. I would be the person that'd be like, yeah, 205, 204. I'd be putting my name into the Nvidia fold. There's so much news out there right now. It'd be like, why not? So thanks for that insight. And I think great breakdown on Nvidia. Somewhat of a mixed picture, but like you said, the bar was so high. It's Caroline Woods, senior markets correspondent for the network.